Hi, payroll accounting students. Today we're going to lecture on Chapter 5, learning objective number 1, which is identify for Social Security purposes those persons covered under the law and those services that make up employment. So basically we're talking about the Social Security and Medicare as you all know it. In the textbook, we refer to it by the more legal name, OASDI, which is Old Age Survivors Disability Insurance, and HI, which is health insurance. But the OASDI is Social Security, and the health insurance is Medicare. Now, you as an employee have probably noticed Social Security and Medicare coming out of your paychecks. So we're going to talk about the reasons why we have these taxes and who's covered by them. So we're going to go ahead and share my screen and look at the PowerPoint. Okay, so what is FICA and what is covered? So there's two types of coverage under FICA, and actually one of them is the Federal Insurance Contribution Act. That's what FICA stands for, of 1935. This determines a tax that's going to be paid on both, a tax that's going to be paid by both an employer and an employee. It's actually a match. So typically whatever the employee has deducted from their paycheck, the employer has to match that amount. Now in 2020, we have some things going on that might change that for a little while due to COVID-19. So remember, we're dealing with data from 2019, and this still applies where it's a match. Okay, so the OASDI rate or Social Security rate is 6.2% for employees, and the Medicare rate or the health insurance rate is 1.45% for employees. Now, those same amounts, 6.2% for Social Security and 1.45% for Medicare, are matched by the employer. Now, there is an additional Medicare tax that the employer does not match, and that's for any wages that exceed $200,000 in a calendar year. So if an employee is paid more than $200,000 in wages, they have to pay an additional 0.9% on wages that are above $200,000. Okay, as of currently, this has not been rescinded. It's still part of the ACA Act. Okay. Now, FICA also deals with Social Security and Medicare, but FICA is for self-employed individuals. FICA stands for the Self-Employment Contribution Act, and that was enacted in 1951. This is how taxes are assessed on self-employed individuals. And it's slightly different because FICA, which consists of both Medicare and Social Security, FICA is for wages earned. FICA, on the other hand, is the net earnings of self-employment, which is earnings minus expenses equals your net earnings. So the self-employment tax is basically determined on the profitability of the company. Okay, so FICA is 12.4% for Social Security and 2.9% for health insurance or Medicare. And basically all that means is the self-employment rates are both the employee and employer rates. So as a self-employed individual, you're basically taxed as if you were both the employer and the employee. And of course, if the earned income is in excess of $200,000, there is still that 0.9% that you would pay as an employee for the additional Medicare. Okay, so first, there's three issues we have to determine before we can start calculating the Social Security taxes. So are you an employee or are you an independent contractor? Is the service that you are providing considered employment? And is compensation considered taxable wages? Okay, we can visit the Social Security Administration's W-2 filing instructions and information page for some additional information that would help us know some of the situations where these taxes may or may not be included, and we'll go over that more in class. Okay, so let's talk about independent contractor versus employee. You know, people work in varying capacities these days, and we have to know if you're an employee or an independent contractor, because that's going to determine the taxation. Now, for most instances within this class, we're going to think of a worker who's an employee is somebody who obtains a W-2 at the end of the tax year. Okay, so when an employee is hired, they're going to complete Form W-4, Employee Withholding Certificate, for the employer, and that's going to tell them how to tax for income tax purposes. So if you filled out a W-4, you're most likely an employee. Okay, if you were given a Form W-9 and told to complete that, then that would be for an independent contractor. Now, just because you receive that from your employer doesn't mean that they have set you up correctly. So let's make sure we understand what these terms mean. So an employer, who is an employer? And an employer is somebody who employs one or more people for performances of services, okay? So the person could be an individual like you or me, or it can be a legal entity like a trust, a state, a partnership, or a corporation. Employment applies to any service performed by the employees of that employer, regardless of the citizenship or residence of either the employee or the employer. Basically, are you as an employer, have you hired somebody to do your work, the work of the company for you? Okay. Now, certain occupations are specifically covered by FICA and are not covered by ACCTG. Okay, some of these are where it might seem as if it was a independent contractor, but by law, these employees have to be taxed under FICA. They have to be considered employees. Full-time life insurance salespeople, agent and commission drivers of food, beverages, or dry cleaning, full-time traveling salespeople, individuals working at home on products that employers supplied on and are returned to specific, to specifications for the employer. So if you're doing some kind of production work at home and the employer is providing all the goods that you need to do that production, and you have to turn it in based on, okay, it's got to be 8 by 10, and it's got to have widget A, B, and C put together, and you have to turn those back into your employer, then you're an employee. There's additional specific situations. Employees of the government, they have certain exemptions from FICA based on when they were hired and what type of jobs they might be doing. For instance, you might know of school teachers like me or other state employees who do not contribute to Social Security. That's because there's an exemption. Even though we're an employee, teachers are employees of the school that they work for. They do not pay into Social Security because there's other plans that we're covered by. So there's certain exemptions for government employees, okay? An inpatriate may be exempt from FICA if they're from one of the 20 countries. An expat are going to be subject to foreign Social Security taxes. We're not really going to deal with the expat and the inpats too much, but just know that they may be exempt or subject depending on where they live and where they work. Okay, what country they're living in and what country they're working in. Family employees under 18 can be exempt from FICA in certain situations. Now, an employee is only a family employee if it's a certain type of business. Like in a corporation, it's not a family business because although the owner of the business might be dad, he's not the owner of the business. He is the president of the business, and the corporation is a legal separate entity from dad. So typically in a corporation, a standard C corporation, children are not considered children because they're not children of the legal corporation entity. Okay, but if you have a sole proprietor or a partnership, then children may be exempt from FICA, only up until the age of 18. Household employees, if you have a maid, a nanny, a butler, a limousine driver, a household employee, and you're paying them less than $2,100 a year, then they're not subject to FICA. So, you know, there's that dollar threshold. And then different exemptions apply for, as listed, like inmates. They don't pay Social Security, which is probably okay because they only get paid 22 cents an hour, maybe 36 cents an hour. Medical interns, student nurses, workers serving temporarily in case of emergency. Some of these can have exemptions not to pay Social Security. So let's talk about an independent contractor specifically. Okay, an independent contractor is different than an employee. Okay, an employee typically, unless they have one of those exemptions, an employee is going to have to pay Social Security and Medicare. An independent contractor, on the other hand, is not going to have Social Security and Medicare withheld from any pay that they receive from the employer, which isn't really an employer in an independent contractor. They're the person that the independent contractor is doing a job for or working for, but it's not an employer. Okay, so if we look at figure 3.2 on page 3.5 or 3-5, sorry, figure 3.2 on page 3.5, it lists the characteristics of an independent contractor. Okay, in California, the law for independent contractors changed January 1st. It used to be a 13-point test to see whether the worker was an employee or independent contractor. Now it's an ABC test, so it's basically a 3-point test. The federal test is in the textbook on figure 3.2, is more like California used to be. So let's go over the 10 characteristics of an independent contractor. The first one is if you're able to hire, supervise, and pay assistants, you may be an independent contractor. If you determine the sequence of your work, you may be an independent contractor. The sequence is like, do you put in the toilet first or do you put in the sink first, right? If you're a plumber, what work do you do first? If you're an independent contractor, you have that independent judgment to determine what order you do your work in. Number 3 is set your own hours of work. So as an employee, we typically have to show up to work from 8 to 5, or, you know, we work whatever our hours are. The employer sets those and we have to show up for work on those at those times. An independent contractor, though, gets to set their own hours. They might say, well, you know, I'll be there around 8 or 9, maybe I'll get there at 10. Or maybe they're very strict on their own hours, but they get to set those hours, not the person who who's hired them to have that job done. Okay. Number 4 is work for as many employers as they wish. So you can work as an independent contractor for as many employers or as many companies as you want. And typically an employee, once you're hired, you work for that employee. You might have 2 jobs, but you can't just kind of go out and work for whoever you want as an employee. But as an independent contractor, you go out and obtain jobs from whatever company that you want to do the work. So that's a good indicator that you are an independent contractor. Independent contractors are paid by the job. So employees are paid by the week or by the day, not by the week. Employees are paid by the week, right? Let me try that again. Employees are paid by the hour, or maybe if they're salary by the week, by the, every other week, whatever. But independent contractors are paid by the job. So if you hire an independent contractor to come in and remodel your bathroom, that remodel is the job that they're doing, and they'll get paid, throughout the job maybe, but it's per that job. Okay. They make their services available to the public. So I worked in a payroll company, and I was an employee. I couldn't make my services available to any company that didn't want to be our client, right? I couldn't just go out as an employee of that company and say, okay, I'm going to do the payroll for this company and not run it through my employer. Independent contractor can basically work again for anybody, and so those services are available to the public. They have their name in the yellow book. Do they even have yellow pages anymore? They have a Yelp page or a website where they can reach the general public. They have an opportunity for profit or loss. So what does this mean? As an independent contractor, you bear the risks of whether you'll be paid or not. As an employee, that risk is gone in most instances because the employer is required to pay you as an employee. The independent contractor, however, let's just say we'll stick with plumber. They go in and they bid a job to redo the bathroom, and they quoted you a price of, say, $1,000. If they end up having to put a lot more work than they thought or buy a lot more supplies, they might lose money on that job. Or if they do a really bad job and the employee and the homeowner doesn't pay them for that job, they could lose on that particular job, right? So they have an opportunity for loss as well as for receiving their earnings. Number 8 is they furnish their own tools, okay? If you're a plumber, you got to have all those tools on your truck. If you're an independent contractor, if you're an employee of, I don't know, the Smells Good plumber, I can't think of who it is right now, but if you're an employee of a plumbing company, then they're going to provide the tools. Or if they don't provide the tools, they're going to probably pay you some kind of monetary fee for keeping your own tools, because as an employee, the employer is supposed to provide those tools for you. But if you're providing your own, you might be an independent contractor, okay? Number 9 is have a substantial investment in your trade. And this kind of goes along with the tools, right? In order to be independent, you have to have all this stuff yourself. So that investment is your time and money to get the skills and tools necessary to run your own business. And then number 10 may be dismissed only under the terms of the contract, right? So it's not like an employee who is either under a hiring contract or at an at-will employment, but an independent contractor, if they don't adhere to the terms of the job, they can be terminated. So now you might say, well, do we have to meet all 10? Absolutely not. But if you're an independent contractor and you meet a couple of those things, then you're probably going to be an independent contractor, okay? There's a lot of wiggle room. There's a lot of gray in determining whether an worker is an employee or an independent contractor. But if it smells like an independent contractor, it looks like an independent contractor, then it's okay. If it looks mostly like an employee but they supply their own tools, it's probably still an employee if all the other things adhere. So it basically gets down to a couple of key points. Who's in control? Is it the employer or the worker? The more control the worker has, the more likely they are an independent contractor. The less control the worker has, the more likely they are an employee. And this is an area where if you misclassify your workers, it could be a major blow to your checkbook later on. So it's important to classify your workers as an employee unless you can really determine that they are an independent contractor, okay? Anybody who is an independent contractor does not have FICA withheld from the pay from the employer or the hiring company, okay? The independent contractor is completely liable for their own Social Security taxes on their net earnings, okay? There's big penalties for misclassification. It can go up to 5 years, these penalties that are listed. And the penalty is equal to the employer share plus the taxes that were not withheld from the employer. So both pieces. So if you misclassify a worker as an independent contractor and it gets back and you have to fix that, you have to pay both shares of the taxes, okay? And penalties. And like I said, it can go back for 5 years, okay? There are some ways for that penalty to be reduced, and you can see those exceptions.